I'm going to tell you how to live off dividends. Let's get straight into it. So, what exactly are dividends? In simple terms, dividends are payments made by a corporation to its shareholders, usually from profits. It's like getting a slice of the company's earnings just for owning their stock. For instance, if you own shares at a company like Coca-Cola or Microsoft, you'll receive regular payments as a reward for your investment. Think of it as a reward for being a part owner of the company, but not all stocks pay dividends, so it's important to know which ones do and how you can benefit. Typically, established companies with stable cash flows are the ones that pay dividends. They're essentially saying, hey, we're doing well, so here's a part of our profit. It's a way for companies to share their success with their shareholders. Why should you consider dividend stocks? Well, there are a few key reasons. First, they provide a steady income stream, which is especially attractive for retirees or anyone looking for regular cash flow. This is because, unlike the fluctuating prices of stocks, dividends tend to be more stable and predictable. They can provide a cushion during market downturns, offering some income even when stock prices fall. Second, many companies that pay dividends have a history of strong financial performance, making them potentially safer investments. These companies are often leaders in their industries and have a track record of generating consistent profits. Investing in dividend-paying stocks can be a more conservative approach compared to growth stocks, which may be more volatile. Studies show that dividend-paying stocks can outperform non-dividend stocks over the long term, especially when dividends are reinvested. This is due to the power of compounding. When you reinvest your dividends, you buy more shares, which in turn generate more dividends. Over time, this can lead to exponential growth in your investment. Now, how do you choose the right dividend stocks? Here's a few tips. Number 1. Dividend Yield. This is the annual dividend payment divided by the stock price. It tells you how much income you can expect relative to the price of the stock. For example, if a stock is priced at $100 and pays an annual dividend of $4, the dividend yield is 4%. A higher yield can mean more income, but be cautious of yields that seem too good to be true. They might indicate a struggling company with a declining stock price. A very high yield can sometimes be a red flag. Number 2. Dividend Payout Ratio. This ratio shows the percentage of earnings paid out as dividends. It helps you understand how much of the company's profit is being distributed to the shareholders versus being reinvested in the business. A lower payout ratio often means the company has room to grow its dividend in the future as it retains more of its earnings. For instance, a payout ratio of 40% suggests the company retains 60% of its earnings, potentially for growth or to weather tough times. Number 3. Dividend Growth Rate. Look for companies that consistently increase their dividends. This can indicate financial health and a commitment to rewarding shareholders. A company that grows its dividend consistently is likely to be financially stable and confident in its future earnings. For example, companies in the Dividend Aristocrats list, which have increased dividends for at least 25 consecutive years, are often seen as reliable dividend payers. Number 4. Company Fundamentals. Always consider the company's overall health, including its business model, industry position, and financial stability. Factors like a strong balance sheet, consistent revenue growth, and a competitive advantage are crucial. It's important to invest in companies with a solid track record and sound management practices. Remember, it's not just about the dividend. The company needs to be fundamentally strong. You want to invest in companies that can sustain and grow their dividend payments over time. To really maximize your dividend income, consider these strategies. Number 1. Reinvesting dividends. Use the power of compound interest by reinvesting your dividends. This means buying more shares, which can generate even more dividends. Over time, this strategy can significantly boost your returns. Many brokerage platforms offer a dividend reinvestment plan (DRIP), which automatically reinvests your dividends at no extra cost. Number 2. Diversify your portfolio. Don't put all your eggs in one basket. Diversify across different industries and sectors to reduce risk. For example, if you only invest in technology stocks, you're exposed to sector-specific risks. By diversifying into sectors like consumer goods, healthcare, and utilities, you can balance your portfolio and potentially reduce volatility. Number 3. Holding long-term. Patience is key. By holding on to dividend stocks for the long term, you can benefit from price appreciation and increased dividend payouts. Companies often increase their dividends over time, rewarding loyal shareholders. This can lead to a growing income stream that can outpace inflation. Reinvesting dividends can significantly enhance your returns over the years. It's a simple yet powerful way to build wealth. By continuously buying more shares with your dividends, you're harnessing the power of compounding, where your returns generate their own returns. Of course, like any investment, dividend stocks come with risks. Companies can cut or eliminate dividends during tough times, and stock prices can be volatile. It's important to do your research and not chase after the highest yields without understanding the risks involved. A company with a high yield may be struggling, and a dividend cut could be imminent. Always keep an eye on your investments and be prepared to adjust your strategy as needed. It's crucial to stay informed about the companies you invest in and the broader market conditions. Regularly review your portfolio and make adjustments if necessary. So, there you have it, a comprehensive guide to making money with dividends. It's a great way to generate passive income and grow your wealth over time. If you found this video helpful, don't forget to like, subscribe, and hit that notification bell so you never miss an update. And let us know in the comments, are you investing in dividend stocks? Which ones are your favorites? Thanks for watching, and we'll see you in the next video. Happy investing!